Hello traders, how can we accurately enter a trade before a strong trend begins? Have you ever experienced the frustrations of thinking that you're buying at the lowest point, you're selling at the highest point, and you feel that, okay, you're going to catch a sharp reversal and you're going to make big profits. But in the end, it resulted in a significant loss. Now, if you have this type of frustration before, then this video is for you. In this video, I'll review the ICI Trading Method with you. And make sure to stay until the end because I'm going to share with you a practical tip for you to have a much consistent trading performance. Now, without further ado, let's dive into the ICI Trading Strategy. Now, let me tell you why trading at the levels that you think are the highest or the lowest will not give you any advantage at all. You must understand that the so-called lowest and the highest point are subjective and they are obvious. The smart money knows this, and like me and you, they want to buy low, they want to sell high, but they will never enter at the obvious levels. They want to be safe. And the fact is that what you consider the lowest level can continue to melt, and what you consider the highest level can continue to trickle its way up. Now, that's why I say that trying to catch the top and the bottom doesn't really give you many advantages. But that doesn't mean it's impossible. Today, I'll teach you how to identify the trend by using the ICI method and how to use the Fibonacci retracement method to identify the potential lowest point or the best entry levels after retracement. This approach also allows you to achieve the buy low and sell high strategy. First, I will introduce you to a pattern that appears in many markets. The pattern that I use frequently to trade the market, which not only gives me a lot of profits, but it also allows me to become a full-time trader. Now, this pattern is called ICI. It stands for Impulse, Corrections, and Impulse. Here's an illustration of the pattern. This is a trading pattern I discovered after many years of trading where a trend is divided into three stages, known as the momentum distribution phase or the impulsive move, and then followed by a momentum accumulation phase or the corrective move, and last, another momentum distribution phase, another impulsive move, to complete one trend move. Now, this pattern is so powerful, I once made 20 hours on a single trade trading this pattern. Again, this is one of the strategies I use to make me a full-time trader. But first, I want you to understand the underlying principles behind the ICI patterns. Now, it is essential for you to understand the concept and know why this pattern occurs and why does this so effective. So, you already learned before that ICI pattern comes with three movements: impulse, correction, impulse. Let me tell you why ICI pattern is so powerful. First, imagine the price is in sideways movement for a while now. And then, because the price is in accumulation phase, it's accumulating a lot of orders, and then there's a strong push to the upside, the buyers win the game, and the price push all the way up. A lot of traders that buy here, they would want to take their profits after the first impulsive move up, okay? So that's why you will see one first impulsive move to the upside, and then momentum will start slowing down. Why? Because the buyers, they bought early, they already take their profits here. They want to get out now. And the sellers started to coming in, and the buyers become sellers, they sell their orders, sellers coming in, it pushes the price down. Now, you may think that the price may drop all the way down, but no, because why? There are still some traders holding their position here, thinking that this is just the beginning. I can hold longer, the price will go higher, and because there is a huge momentum push the price up, it tells the market that, hey, the buyers are controlling the market, you may not want to sell too aggressively, because eventually the price is going to go up. And because of that, when this corrective movement started to get exhausted, the momentum will slow down and the bullish momentum will pick up again, which pushed the price to a new high again, impulsively. Now, this is what I call the impulse correction. Impulse, once this is formed, it will complete one bullish movement to the upside. Now, on the chart, you can see that the price was on a sideways movement. And then there's a strong push to the upside. When the price push to the upside impulsively, guess what? Buyers that buy here, they will want to take their profits here because it's too big of the move. Some of them will think it's enough. And this is when the sellers started to come in as well. And that's why they push the price down. Buyers become seller. Seller comes in, they push the price down. Like I said before, there are still some traders who bought here. They think that this is just the beginning. The price may go far away, so they did not close their orders. And there are other traders that think that, guess what? The momentum is picking up already. There's no point for us to go against the momentum. Now it's the retracement. Guess what? We can buy at a discounted price, but eventually the price is going to follow this massive momentum because the big players already show their hand. We just need to follow the big player. So guess what happened? Those that buy here, they may keep buying here. And those who believe that this is a strong bullish momentum and the buyers are dominating the market, they will keep buying here as well. And that's why slowly you will see the corrective movement get exhausted, get weaker, and the price will start to follow the original movement, which is the initial impulsive move and being pushed all the way up. Now, this is the foundation or the principle or the logic behind the ICI pattern. If we understand the ICI method and we believe that if the bias is dominating the market, after a retracement, after a pause, the price will still continue to follow the original impulsive movement. And if there's a drop, guess what? After the corrective movement, traders still believe that the price will still follow the initial impulsive directions. Guess what? The price will still drop. So our job right now is to identify where will the price stop during the corrective phase. If we're able to identify where will the price stop during the corrective phase, guess what? We will have a very high probability entry and we will be able to trade alongside with the big momentum movement. By anticipating there's a next impulsive movement coming after the first impulsive move is formed and they are going to go in the same directions. The keyword here is timing is everything. Identify the right level for you to buy, for you to sell is one of the most important factors that will determine whether you are going to make money or not in your trade. So by confirm the ICI pattern and employ the Fibonacci retracement, we can effectively pinpoint accurate entry points. Now, these combinations of the ICI pattern plus the Fibonacci retracement, they will give us a very high probability trading opportunities. Next, I'll share the 5 steps that you need to know so that you are able to use the ICI patterns effectively. Step number 1, you want an impulsive move that breaks the trend line for you to confirm that's the first trend that you want to capture. And then pull out the Fibonacci retracement when the price started to make its reversal. That's step number 2. Wait for the reversal pattern. Also, to identify the levels that you want to trade, which there is a structure on the left align with the Fibonacci or one of the Fibonacci numbers, and then wait for the entry trigger at the level that you want, pull the trigger, set your TP and stop loss, and wait for the magic to happen. And boom, you made it. Okay, let me show you another bearish example here. First, trendline break. Now we have the trendline break. We just need to wait for the price to make the reversal. So the price dropped all the way down, started to make its reversal. We pull out our Fibonacci 2. Look left, look for the structure. In this case, we have a resistance aligned with the Fibonacci retracement level. We want to sell here. And then we wait for the entry trigger that we wanted. We place our sell order. Okay, TP at 1618. Boom. Okay, price almost to our target profits and it reversed and we get taken out with a little bit of profit. It's fine. This is normal. So step 1, 2, and 3, make sure you understand how it works. Now, step number 4 is we only focus on the second and third impulsive movement. What do I mean by this? At first, you have a trendline break. This is the first impulsive movement. And then we wait for the price to make a reversal. And then we capture the next, or we anticipate this is the beginning of the next impulsive movement, which if it's happened, this is a second impulsive movement. So we trade here, all right? And then when the price started to drop again, and then you can still look for the next termination point during the reversal where you think this is the end of the reversal. So you want to buy here. So you can place a buy order and the price go up. This will be the third impulsive movement. After the third impulsive movement is formed, we will no longer be interested to trade the ICI method again. Why? Because I assume after the third impulsive movement, the market will be exhausted. And guess what will happen? If the market is exhausted, momentum distribution there has ended, momentum accumulation phase will come out again. And if it's come out, it's going to be big. And if it's big, if you trade here, you are going to fail. You are going to have a lot of losses. So first impulsive movement, second impulsive movement works very well. Go. Now, step number 5. There's one more thing I would like to cover. Sometimes you will see the price break the trend line, drop impulsively, okay? And then the price break the trend line again, impulsively again. And then the price break the trend line impulsively again and again and again. So on a range, within this range, if you see the price keep breaking trend lines, forming a new trend, guess what? The price is already in sideways structure. Stay out. You do not want to capture any of the impulsive move, any of the ICI pattern that you see within this sideways pattern until the price get out of this pattern. And then you can start to look for entry opportunities after the price is out of this range. Because when there's too many trend lines break by impulsive move around the same range, it's a sideways market. You are not going to make money in the sideways market. Okay, learn to spot this pattern. Now, by mastering these 5 steps, you will be able to use the ICI pattern effectively. Each step is important to help you in your trading decisions and to improve your overall trading performance. I hope the trading methods I share regarding the ICI pattern will be helpful to you. If it is helpful, remember to give this video a like. Now, before we wrap up this video, there's one more secret I would like to share. Now, it's important to understand that no matter how promising a pattern may appear, there is no 100% success rate. The purpose of capturing the ICI pattern just increase our odds, give us a higher probability of profits. Now, when you use ICI methods, it will give you around 50 to 60% win rate. But in my personal experience, my win rate, overall win rate using the ICI pattern is around 45 to 50%. Because guess what? I'll make mistakes. I make some errors when it comes to trading decisions. But because I control my losses strictly, I manage my risk effectively, where my risk is kept within 2% per trade, and my profits have reached the highest 1 to 20 risk-reward ratio, and average of 1 to 4 risk-reward ratio by using this ICI method. So you want to control losses, you want to manage your risk, control lot size. This will guarantee your survival in your trading, and the longer you survive in this market, the higher the chance that you can make money trading. With that, we conclude this week's video. If you have any questions, you can leave your comments down below. I'll try my best to answer your questions.